Topic 1. Disney appoints Josh D'Amaro as CEO, signaling leadership changes and strategic shifts in the entertainment industry. Walt Disney Company has announced the appointment of Josh D'Amaro as its new CEO, effective March 18, 2024. D'Amaro, who has led Disney's theme parks and resorts division, has overseen significant growth in that sector. This appointment emphasizes the importance of Disney's theme parks and cruise business, indicating a strategic shift for the company. Dana Walden has been appointed as Disney's President and Chief Creative Officer, reporting directly to D'Amaro, overseeing storytelling and creative strategy. This move is seen as a strategic response to changes in the entertainment industry, including declining traditional TV viewership and the rise of streaming services. Bob Iger, who returned as CEO in 2022, has focused on restructuring, cost-cutting, and enhancing the profitability of the streaming business, and he will remain on Disney's board and as an advisor until the end of the year. This appointment is expected to be a crucial turning point for Disney's future growth and sustainable development. Topic 2. Elon Musk's SpaceX merges with AI startup xAI, marking a strategic expansion into artificial intelligence. Elon Musk's SpaceX is acquiring his AI startup xAI, marking a strategic expansion into the field of artificial intelligence. This merger values SpaceX and xAI at $1 trillion and $250 billion, respectively, making it the largest M&A deal in the world at a total valuation of $1.25 trillion. Musk plans to create an innovation engine that combines AI, rockets, space-based internet, direct communication with mobile devices, real-time information, and free speech platforms. SpaceX aims to establish AI data centers in space to reduce AI computing costs, coinciding with its upcoming IPO. This merger is expected to further integrate Musk's various ventures, creating new market opportunities by combining SpaceX's space technology with xAI's AI capabilities. Topic 3. U.S.-India trade deal boosts investor sentiment and impacts markets, reflecting significant international trade developments. The United States and India have stabilized their relationship by signing a trade agreement after prolonged negotiations. The agreement includes a reduction of mutual tariffs from 25% to 18% by the U.S. and a commitment from India to purchase more American products while halting purchases of Russian oil. As a result, the Indian stock market surged, particularly the Nifty 50 index, and the Indian rupee strengthened. This agreement follows the signing of a free trade agreement between India and the European Union, demonstrating the U.S.'s intent to avoid isolation in international trade. Such trade agreements are expected to provide positive external growth stimuli for the Indian economy and significantly impact the global trade environment. Topic 4. Government shutdown delays U.S. jobs report, highlighting political and economic uncertainties. A partial shutdown of the U.S. federal government has delayed the release of important economic data, particularly the January jobs report from the Bureau of Labor Statistics, BLS. This shutdown occurred due to controversies surrounding immigration enforcement by the Department of Homeland Security, DHS, and a failure to reach a budget agreement between Democrats and Republicans. Consequently, the BLS has halted data collection, processing, and distribution. Once the shutdown ends, the BLS will resume normal operations and announce a new release date for the delayed report. This shutdown comes at a time when the BLS is trying to recover from last year's record 43-day shutdown, significantly impacting economic data reporting. While the economy shows strong growth, the job market remains sluggish, leading economists to analyze whether employment will catch up with growth or if growth will slow to match employment stagnation. This political and economic uncertainty is amplifying concerns about the future direction of the U.S. economy.